Good morning, everyone. Morning grain notes here. We'll go back and talk about yesterday's carryouts to start. The corn carryout 1.500, that suggests a fundamental fair value price of $5. In beans, the carryout of 320 suggests a November fair price level of $11. Obviously, both those levels are below our current levels. We have seen for the past 2-3 months futures drift lower but never quite reached the fair value levels. So while $5 and $11 is our official levels, wouldn't be surprised at all to see support start coming into corn at 510, maybe even 515, and then beans maybe as high as 1150. So we do expect that recent pattern of keeping a little bit of premium in these markets to continue. So now let's look forward. What is the next issue that all trade will turn its attention to? Well, trade will turn attention to South America when we reach about 75% harvested for beans. We would expect most of the talk will turn attention to South America immediately. Early talk for South America is that for the most part, planting is on pace. There's a few showers here to slow things down here and there, but not too much level of concern being talked about. What we want to point out in this recording here is that this 320 carryout for beans is quite unlikely to be fixed by South American issues unless we can come up with something big. It has to be pretty sizable to offset the number just seen yesterday, largest carryout in beans in a year. While most talk will turn to South America, we do want to bring up large caution to not get too caught up in smaller South American weather stories, planting stories, whatever. I mean, if we could come up with something sizable, that's one thing. But if trade is, or if we're listening to shows or whatever, and they're just chit-chatting about some minor issues, that will not be enough to offset a 320 carryout. What is the most foreseeable issue that could help bring down that 320 carryout would be any large-scale China buying. Now, we did see that last year, so that is where we would put more of our attention to true market support, definitely in the short term. So we'll keep eyes and ears peeled for any China buying stories. Even rumors could help out a little bit, but again, a 320 carryout number is a very large number to overcome. So we would expect a general grind lower. Overnight again last night had November beans up 7. Overnight continues to offer some of the best bounces we see in an entire trading day. So perhaps we could use some of these overnight bounces as selling opportunities. So we'll go forward from here. Our carryout numbers both fundamentally suggest a grind lower, and we'll keep first attention on China for influences over the next few months. Turning over to cattle, we had a Texas cash pool trade of 124.15. That's the same level they traded last week. I think a starting assumption would be a 124 cash trade. Now, futures were a little bit overpriced until yesterday's correction. Seeing yesterday's correction, basically what that did is just bring cattle right back to what we expect for a cash trade. They were assuming 125 cash trade. Now futures are assuming a 124. We'll keep eyes and ears peeled in case we do see a better than 124 cash trade, but for this time of the week here on a Wednesday morning, that is where most would assume we'll be seeing cash trade at 124, so we'll call futures in line with expectations. So that's what we're going to look at today. We'll see if we get more cash trades again on grains, larger carryout numbers. Would expect most bias to be a grind lower. Let's keep focused on the larger stories again. That can't be stressed enough. Something that can truly help out a 320 carryout. So let's see what we get here today. If anyone has questions, as always, give me a call when you can. Thank you.